Welcome back to the Affinity Insurance Podcast. I have with me today two of our insurance experts, Alyssa Wilcox and Victoria Cowart, once again. And today we're talking about a really important topic we hear a lot from business owners around what kind of premiums they should be going for, deductibles, how to balance their coverage with the cost. Really important stuff. You don't want to have to pay too much for your insurance, obviously, but you want to make sure that you're protecting your businesses and your employees. So we're going to jump right into the first question. And I'm going to pass this one to Alyssa first. A lot of people hear that raising their deductible can lower their premium, but how do you determine the right balance between saving money and still having affordable out-of-pocket costs if something happens, knowing that if you choose a higher premium, it can sometimes be more affordable, but also at the same time, over time you could be spending more.
So I think insurance, first and foremost, is a transfer of risk. So it's important to determine what your risk appetite is. Like, obviously we need to have insurance, oftentimes for contracts, whether it be a lease or a project you're working on. And so, there's that need to have the coverage, and of course, to avoid lawsuits, the costs that are incurred with that. So I think it's just it's important to understand what your risk appetite is. If, how much do you feel a claim is likely? How much are you willing to go out of pocket for? And, and then look at that as a balancing act. If I increase my premium or my deductible to $5,000, how does that affect my premium? I think oftentimes we see that higher deductibles don't offer that much of a cost savings. So I think it's really important to just kind of evaluate it and explore those, and just pick what's going to be best for you.
Victoria, let me ask you on this. So around discounts, many insurance companies offer them, but not all bundles are created equal. You hear a lot like just bundle everything and save, but that's not necessarily always the case. So what are the best types of policies that you can bundle together? And how does bundling typically work for businesses? I know you kind of hear that more on the consumer side a lot about bundling things, but how does that work for businesses, and what are some things they actually can bundle together?
So there is what's called a business owner's package, which is like your typical bundle, which would cover your general liability for your business along with your business personal property. And that typically will save you more money as opposed to getting two separate policies. And it's nice because you just have one policy to maintain. It's a really broad question that you're asking. It depends on the carriers and what kind of policies you are trying to, bundle up together. As far as personal lines goes, that's pretty easy. You tend to bundle with the same carrier, like you get your homeowners and your auto insurance. So yeah, it just depends on what coverage you're looking for. Are you working with the same carrier? And that's pretty much the route you go. Like I said, it's a broad question, but a typical bundled policy would be your business owner's policy.
And I think too, to add to that, like if something comes up and you need to add a new line of coverage, it's where you reach out to your agent and say, hey, I need to add employment practices liability. How do I do that? Well, you can add it super affordably to your business owner's policy in a lot of cases. And that way you're not, having multiple policies, and you're saving costs in that long run.
Are there any discounts for bundled, or maybe not even necessarily bundles, but for business owners that they might not be aware of, like lesser known types of discounts you can get? Like you think about on the consumer side, like safe driver discounts, for instance, but on the business side of things, are there any things like that business owners can maybe qualify for if they, prove something, or, how would they go about the process of figuring that out for their specific needs?
I would say a lot of that has to do with claims history. I wouldn't say you get special discounts for stuff, but carriers will look at your loss history. And if you haven't had any claims, that's going to typically give you a lower premium, as opposed to if you have one or multiple claims, that is going to increase the premium.
Yeah, I don't know. Like on the business side, there are less, sort of discounts available. But I do think it applies more to your claims history. Like whenever you're dealing with property, having things like cameras and, centrally monitored alarm systems. Those are helpful, and some carriers will only consider accounts that have those in place. I think more just like a consistent good loss history, and owners being active in the operations. That's a big one that we see a lot.
Speaking of the claims history part, is there anything to the idea of being more cautious with what you claim? Like kind of looking at if something happens and the reality is it's not a great thing, but it's pretty affordable to fix. Is it really worth a claim when you know that if you had a better claims history, when you go to renew, you might get a better rate? Should you kind of balance those two things?
Definitely. I would personally, if I can afford to fix it, even if say my deductible on my homeowners is $1,000 and something got damaged for $1,100 or $1,200, I would rather just go ahead and pay that out of my pocket so that I don't have a claim on my policy, which raises your premiums. But to each their own. That's me personally. I'd rather pay out of pocket and not have a claim.
I think on the flip side, though, it's important, especially as a business owner, if an employee gets injured, even if it's something really minor, seemingly minor, it is always best to report that to the carrier, because what can happen is that things, if not addressed, can escalate quickly and become very expensive. So it is a balance. On one hand, carriers expect there to be some claims. You have your deductible, how much you're willing to take on versus wanting to have you use the coverage that's there,
Would you say a rule of thumb is if it affects humans, then you probably need to claim it. But if it's maybe property or inanimate objects, it's a little bit more of a gray area.
Yeah, that's good. A good way to look at it.
And humans, when humans serve you with a lawsuit, you definitely let the carrier know right away.
Okay, how should a business owner review their policies to make sure they're getting the best rate and even avoid overpaying for policies they may not need anymore or weren't serving them over the past, year or whatever the timing on the policy was?
I think an annual review is more than sufficient, especially if you have a policy with in preferred carriers like your Hartford or your Liberty Mutual. Those have all the bells and whistles, really affordable prices. And so, and the carriers automatically renew them in most cases. So in those cases, oftentimes you're in the best policy and it's okay to just kind of let those auto renew. But if you have sort of more in-depth exposures,
or major changes in operations, or you've acquired new properties and anything major, that would definitely, you'd want to midterm meet up with your agent and discuss that. But like Alyssa said, you're pretty safe with an annual review of your coverage.
But and as things change, let your agent know so that they can adjust your coverage to meet your needs.
Are there any other factors outside of claims history that business owners should think about or be aware of that might affect their premiums and the cost of their policies?
Depending on the type of policy, with workers' compensation, if you have several office employees, your policy premium is going to be different than someone that owns a construction company. So really, your operations is a big factor in what carriers are looking at when they're rating your policy.
I think, being, showing that you're being proactive and that you have maybe risk and safety measures in place, where you're trying to actively prevent accidents from happening, that goes a long way with carriers. I think just evaluating what the potential risks are and having a plan in place to address it if anything comes up.
And if you're a bigger company or a bigger risk, carriers will send out people to help you evaluate that risk and get a better idea of, the coverage you need things that you can do to like upgrade your property to make it safer. So carriers are often very willing to help you out in that aspect.
Well, thank y'all for sharing your insurance expertise as always. And thank you for tuning into this episode of the Affinity Insurance Podcast. Be sure to tune in next month for another great episode. Like this video, share it with somebody that could use it, and make sure to subscribe to our channel as well. See you next time.